We're here to take a little bit of a deep dive into VA loans, Veteran Administration loans. We talked a little bit about it a couple of weeks ago, but there were still a lot of questions. So we're going to talk a little more thoroughly. And Danielle has tons of information for us.
Right. I thought it was an important, I was thinking, well, this weekend obviously is, about those people who are no longer with us and served, but it also makes me think about the people who are still out there. And I am one who benefited because of my husband from VA loans to buy the house I'm currently at. I currently have a client who is using a VA loan. And I hear, and you do too, over and over, Ruth, on various real estate groups around the United States, often having negative connotations about what it means to represent buyers using a VA loan and what it means to represent sellers who may be looking at a VA loan offer. So I thought it would be.
And we have to, unfortunately tell some of our buyers in a really competitive market, you may need to, look at getting a different loan because it just won't put you in a competitive position. We hate to do that because we don't think that's fair. It's one of the few really great things that we give to those who serve us. It's an excellent product and has a lot of benefits to it.
But that's what I'm trying to say is that I think there is an assumption of what that means. But just because somebody has 100% loan does not mean that they're a poor candidate for purchasing. It does not mean that if anything goes wrong, they don't have the money.
Absolutely not. And it doesn't even mean that, with a low down payment in non-VA loans, but it certainly doesn't mean it with VA loans. If you can borrow money at, the interest rates that we've been seeing lately, even right now, just over 5%, you should probably do that. So if you can take your cash and use that elsewhere, that's probably a pretty smart financial move. We've talked about that before. So the idea that people who have a VA loan because it's 100% and no down payment are on the verge of destitution is just completely wrong.
Well, and again, it comes down to, I think, us as agents knowing what the program's about, what it means, and then trying to help sell that to an agent on the other end who might not really understand what's going on. But one of the reasons I want to do this is because some of the statistics I was reading about this, because me and numbers, was that there's a pretty decent percentage, probably about 25 to 30% of people who are not realizing they are eligible for these this program.
Wow.
So first of all, what I want to talk about is that the VA loan is not issued from the Veterans Affairs Department. It is backed. Much like an FHA loan has federal backing, these VA loans are backed. So you can use most institutions, most brokers and people who are in the lending out there can provide VA loans. You don't have to use a veteran-specific credit union or bank or anything like that.
With that in the title that makes it seem like they're somehow affiliated.
Correct.
But they're not really.
Right.
And we have great lenders who do VA loans.
I'll tell you what, again, maybe too much information, but my husband and I do use a veterans bank as our primary bank. We did not go through them when getting our loan. We didn't have to. Both Ruth and I have great lenders who are, can get good rates and all that good stuff and handle it fully. So that's one of the myths I kind of want to talk about. But to kind of know about this, though, it is only primary residence. It cannot be used for vacation homes or secondary homes. It has to be residence. Sometimes you can buy you can buy land and wrap it into like a construction loan, but not all lending institutions do that for the VA loans. Additionally, sometimes you can get manufactured or modulated homes also purchased with that. But again, that, that's just a hard sell regardless for lenders, let alone VA. So that's probably more where the obstacles come in that way. So again, people think veterans, so they tend to think one way, like veterans, active duty military who maybe went across the world and served. And that is, one that absolutely went there. People who are actively in duty have, I think it's somewhere around a max of 108 days. So that's what, 6 months? Yeah. Of duty to be eligible for it. So it doesn't have to be very long.
What about reserves?
Reserves, absolutely. There is a minimum amount of days. So a lot of these have to do with needing to hit a certain amount of days of showing up. So reservists, have a certain amount that they're allowed to use, like miss, active duty, it's hard. You're there every single day. Reservists, that it's, 1 week in a month and a couple of weeks a year for their time. If you don't meet some of those criteria, if you've missed a couple months over the course of your day, you can get a little close. So it's not all. There is definitely a time of service necessary to do it, to be eligible. So also surviving spouses of a service member who either died while in active duty or from a service-related disability are eligible. Now, the caveat with that is that they cannot be remarried. So it has to be kind of the surviving spouse who's like, needs these type of benefits to be able to kind of keep moving forward. There are credit and income restrictions. And again, each lending institution is going to kind of have their own, but they are a bit more lax or understanding than traditional loans, which is part of the reason that the VA is doing this. Yes, it's a great, it's a benefit and a thank you, but it also understands that sometimes, especially moving often and sometimes lower salaries and stuff like that, it's hard depending on where people are at. So they need this little extra benefit. So if you've gone through, they have a shorter amount of period of forgiveness to get it in cases of bankruptcy, short sales, foreclosures. So in a traditional conventional loan or even FHA, there's a certain amount, I believe it's 36 months. It might have changed, sorry, but VA has a little less standards than that. You can kind of rebound from that a little faster. So that's good. For Illinois, it's not as necessary to, well, we have areas, I guess, but the VA limit is $647,000. And that is in like normal areas. If you're in a high cost of living, it's almost to $1 million. So there is a lot of, so again, it's not just somebody looking for, a starter home. This is why that people don't think they're eligible. If they've been out of the military for a while but hit those dates that are required, they can still use it. They could have bought a different home some other time with a conventional or an FHA. And they're 40 years old, 50 years old, they could still tap into these benefits if they meet other criteria. There is no private mortgage insurance. And as we said, you can go as little as 100, is 0% down. So you don't have to. It's just a benefit. And like Ruth was saying, might as well, if you could take these opportunities to put it towards something else, especially, well, maybe as rates are going up, maybe it's not as beneficial, but again, their rates are very, very good too.
Well, still, where else can you get 5% interest? So rates might be up from where they were, but it's still a very favorable interest rate. So if you can put that money to work elsewhere, that might make sense. Just look at your own situation.
Correct. And, again, for sellers, there's not too many more hoops. Again, I'm getting ready to close on one. And I've closed on other ones before too, in different settings. $100 termite inspection. That's standard. That is what you need. And we live in an area that termites, while not unheard of, are not as prevalent. So the chances, and please, that you would want to know anyway, one way or another, right? If there's a problem structurally as a result of termites, because nobody really knows that until it's kind of too late. So that's one, and it's about $115. That does
typically that gets put into the contract, and they typically ask the seller to pay for that.
And again, it doesn't. The seller doesn't need to pay for it. It just cannot be paid for by the borrower.
Yes.
So again, if you're looking at, I'm if all things are considered, if you're selling a house for $300,000 and a VA loan comes in at 310, 320, whatever the market, or 280, depending on what the market is that we're, facing, it's not going to, that extra $100 isn't going to really be a problem. Now, or shouldn't be a problem, or at least what's the barrier?
Right.
Considering it, right? And then additionally, okay, so if it's a rural area where it's on, a well, they do require a well test. Again, there's a good chance that a conventional buyer,
any decent buyer's agent, is going to write a well
absolutely
through the contract if there's a well in existence.
Absolutely. Septic and well, you want to have some sort of testing, make sure that things, are working well. So again, a couple $100, and, we're not talking about that this is going to push off sellers, that they're going to be totally thrown off.
Like somehow it's going to cost them thousands of dollars.
Absolutely.
And then they need to make sure that the home is livable, similar to FHA. When they do the appraisal, they'll check for certain things. They love to flag peeling paint, missing handrails, smoke and CO detectors, a few other things that are considered health and safety concerns come under the appraisal inspection, and you'd have to be willing to take care of that. It's usually pretty minimal unless your house is falling down, right?
And yeah, exactly. So first of all, if you choose to put a house on the market that has a lot of work that needs to be done, you've already kind of accepted the fact that you are likely going to have a smaller buyer pool.
Because you may not be able to get a conventional loan with a lot of things that
I was just going to say. So, I mean, even in this market, Ruth, not even in a seller's market, just the last few years, we've called it for a half a decade at least, the HGTV syndrome, which is everybody, no matter what type of funding they want is move-in ready as humanly possible. Mm-hmm. So you're already kind of at a disadvantage if you have peeling paint and you don't have, stairs with handles and things like that people, things are getting rickety. You're already going to have a buyer's pool that don't want, that are minimal anyway. So what I'm saying is in a stable, kept up house,
it's really not going to be very different. You as the seller are going to see almost no difference accepting a VA loan. The termite is like the one thing that, just, okay, it's $100. Really, you're selling a probably many, many tens of thousands, maybe many hundreds of thousands of dollars house. Do a termite inspection for the people who served your country.
Absolutely.
And that's probably where sometimes we get a little bit on a soapbox. Certainly, we want everyone to be on relatively equal footing, but we really don't want our men and women who have served our country to be discriminated against because of financing that they have earned, a benefit that they've earned, that is a great benefit to them and really no issue for sellers. So stop. Agents stop. We'll talk about that on our agents YouTube in a minute.
Please.
But sellers, stop discriminating against our veterans.
Absolutely. So, and just a couple extra things about the VA, they can be used over and over. Now, you can't have them simultaneously, but if you are selling a house that had a VA loan, and you are buying your next house and you're closing on your sale, that's being paid off, and you're buying, you could do it again. You can use another VA loan. They can be used. They just can't have more than one open at a time. In some instances, which could be a very cool selling point, especially if somebody had bought with a VA loan maybe a year ago or so, and now their rates are much higher. Some cases they can be assumable. So if a buyer is eligible for a VA loan and you currently have a VA loan on your home, sometimes those buyers can assume your rate. So that's kind of a cool thing. And then there is no, like we said, no monthly mortgage insurance. There is a funding fee. So again, when you're looking at different things that to consider in closing costs and things like that, you do want to take in consideration there is a funding fee and it can be significant. But again, it's usually not out of control more than what origination fee is for a traditional loan. And then there is no prepayment penalty. So if you bought when you were young and your income, especially if you got out of the military and got like a really high paying job and you want to pay it off quicker, there is no penalty for that. So those are kind of extra things to look at, be aware of, could be selling points in the future. Again, I just wanted people to get it because it was very upsetting when I know that this could be a very great benefit that a lot of people aren't taking advantage of. So I just wanted to spend an entire segment, because last time we talked about FHA loans as well, but I really wanted to talk a bit more about the pros and the very, very few cons, in my opinion, of the VA loans, and encouraging people that if they think they're eligible and not sure, where to go next, that they knew some of their options and some of the benefits. Hello, Mike. So.
All right. So good morning, Mike. This is Putting the Real in Real Estate. And I'm Ruth Sheehan with eXp Realty.
And I'm Danielle Tully.
And we will see you next week. If you are an agent, pop over to our YouTube channel where we're going to do the inside scoop on VA loans from an agent's point of view.
Please, agents, tune in. Very important to know.
Yeah, we might have to slap a few